Today we're going to talk about landlord-tenant disputes, particularly those tenants who feel like they have no choice but to pack up the store and vacate. Decision perhaps made easier by the recent City Council legislation that ostensibly extinguishes personal guarantees through at least September. However, it's not so clear if personal liability will be completely excused if the landlord has available to it a remedy called piercing the corporate veil, which allows the landlord to attack the owner or shareholder's personal assets if certain corporate formalities have been disregarded. Today, we're going to talk about 5 considerations that a company should consider before vacating to make sure that it does not expose its owners to personal liability. First, have corporate formalities been followed? Are there corporate bylaws? Is there an operating agreement? Have those documents been abided by? 2, is the corporation adequately capitalized to run the business? Does the bank account only have money in it when there are bills to be paid? Or is there regular capital in the bank account so that the business can account for expenses at any given time? Relatedly, number 3, have company funds or property been commingled with owner or parent company funds or property? The corporate bank account should be entirely separate from the owner bank account. That often doesn't happen. Very often an owner will use his or her personal assets to pay corporate expenses. Just as often, a corporation will use its own expenses to pay an owner's personal expenses. Should not be happening. They should be kept completely separate. 4th, related to this in some small fashion, has the corporation been serving its own best interests or the best interests of the owner? Obviously, all decisions made at the corporate level should be in the best interest of the corporation or LLC, and those interests don't always align with the best interests of the owner. So this is another factor that needs to be looked at. And finally, and again related to number 4, number 5, is the corporation an independent profit center and not an extended account of the owners? The corporation should be maintaining its own profit and losses. It should not be an extension of the owner or the parent company's personal or parent company balance sheet. These are just 5 factors to consider, and they should be considered in far more detail with your respective counsel before making a decision as to whether or not to vacate your commercial space. Personal liability might still attach even with the recent City Council legislation. I'm Lee. This has been In Brief. Looking forward to connecting again soon.